Let's move on to our sixth ticker of the day, and that is Boeing. The stock is up as it faces more scrutiny over its handling of the 737 MAX crashes. This comes as the jetmaker's board of directors met in San Antonio yesterday, approving its quarterly dividend at $2.05 a share. Joining us is Ivan Feinseth from Tigress Financial Partners. Ivan, it's interesting to see how the headlines have come out in one direction, and yet where you see the stock move, at least as it relates to Boeing. What do you think is supporting that price right now?
The one key thing is that the airline industry is capacity constrained and desperately needs new planes. And unfortunately, the grounding of the MAX did hurt the industry, and has hurt not only the shareholders of Boeing, but other stakeholders, including the employees and employees and shareholders of the suppliers and the airlines as well. And the reason is that the whole industry is doing very well because of the airline industry is doing very well because of the strong economy, and they desperately need to increase capacity. And that's why Boeing has not seen a single cancellation of any of the 737 MAX orders, and is also continuing to receive strong order demand for the 787 and the 777.
So you're saying the market demand certainly points to at least sustained business for Boeing, and yet we are looking at what's a bit of a moving target in terms of when these jets will be back in operation and what this means for the airlines as well. How do you think investors should be assessing all those moving parts?
Well, I think the weakness in Boeing throughout this whole situation is a buying opportunity. I always like to say you want to buy good companies when they're having a bad time. The disappointment has been that this return to service, or the recertification of the software, has taken way longer than I thought and many people have expected, which goes more toward, even with years of experience, companies just don't handle crisis well. They should have addressed it head on. And now you're seeing these text messages from other employees. I think they're just trying to, cover their tracks by saying, hey, I told you there was a problem a long time ago. However, if this really was a systemic issue, luckily we wouldn't have more plane crashes, but we would have had many more pilots at the time the plane was in service, alerting their maintenance crews to the fact that there's some issue. But these were two isolated incidents, so I don't think it's a systemic problem. I think it's a handling and maneuverability problem that pilots have to be trained on, and that's what they're focusing on doing. And I think that you could see as once they put the 737 MAX back in the service, I think within 6 months the stock will be back over $450 a share.
So you talk about the buying opportunity that's there right now. We're looking at a stock that started trading at $339.74. Is this the entry point if you're not already there, or do you think there's a little more downside?
This has been, since the problem happened and the stock pulled back from $450 to the $330 range, it's gone from $330 to almost $390 and back here again to $330. So this is the low end of the range since this unfortunate catastrophe has happened. So that is the buying opportunity here. And you can't pick the exact bottom, but longer term, I think there's a lot of upside to Boeing.
What other opportunities do you see coming out of this? Clearly, airlines are hurting as well, some more than others. Those like Southwest, who had a lot of the 737 MAX jets, certainly are taking the bigger hit.
Southwest is one of my favorite airlines. I have a buy on Southwest, and unique for Southwest is they only fly 737s, and that's been part of their competitive advantage, that they have reduced maintenance costs and training costs because they have the largest fleet of 737 MAXs, but their whole fleet is Boeing 737s. And that has benefited them, and unfortunately, for a long time, unfortunately, it has hurt them. Now, once you see the return of this plane, I think that you'll see a significant move up in Southwest Airlines stock as well.
How much upside do you see, let's say, 12-month price target?
Well, we don't use specific price targets, but right now, Southwest trading around the $54 range. It could be in the mid-60s in 12 months, which would be almost a 20% gain.
Okay, let's pull back a bit from this space to look at the broader market and how it's trading right now. Clearly, still some uncertainties that are in place on the geopolitical front. Brexit, obviously U.S.-China trade as well, though that looks increasingly promising that something will come out of what is a potential meeting at the APEC summit in November. How do you think that's factoring into the dynamics at play right now? Is it really all about earnings?
Well, I think it's about three things. Is the three drivers of the market is that we are in a de-escalation of trade tensions, or get some positive momentum in trade negotiations with China, which is helping. The Fed is definitely on the side of the bulls. This is a very market-friendly Fed that has said they want to be ahead of any economic slowdown. That both Vice Chair Clarida and Chair Powell have said, our job is to keep the economic expansion going as far as possible for as long as possible. And they have been saying we want to be preemptive, where other Fed governors waited till we were, the data confirmed we were in a recession before they cut rates, which was usually too late. So this is a very market-friendly Fed that is now on the side of the bulls. And once again, we are seeing another result of quarterly earnings coming in not as bad as feared. So I think we have upside momentum from quarterly earnings. And if we can get over this quarter, there's an expected pickup in earnings growth in the fourth quarter, and then again, a receleration of earnings growth in 2020. So I think you have three main factors that are going to drive this market higher, and I think we'll see new all-time highs in the S&P 500 before the end of the year.
Okay, we'll check in with you before the end of the year. Ivan Feinseth, great to have you on today.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.